Staff reports. Auditor's report 2017 financial statements presentation. Ms. Leonard.
Through you, Your Worship, we have Sue Bragg from Collins Barrow, our auditors, to present the findings of our 2017 audit report.
Welcome, Ms. Bragg.
Good afternoon, everyone. So I believe, as well as the audited financial statement, you also received a copy of our PowerPoint presentation on there Friday. So I'm going to run you through the PowerPoint presentation. Very happy to answer any questions, and if you'd like to interrupt as I go, that's fine, or if you want to wait till the end, I'm quite happy with that as well. So in terms of audit results, so today we are here to present sort of the details of the financial statement to Council. They will be brought to for endorsement at the Council meeting on July 23rd, so we won't be finalizing them yet. And as we have done in the past number of years, they are presented in draft form. We require a quorum of Council to approve the draft financial statements before we finalize them and remove the watermark. As in prior years, it is an unqualified opinion that we are issuing in July. The statement of operations, all of the revenues and expenses, I've provided a summary here, and I'm sure you saw those in your financial statements as well. Operating revenues were up both from last year and budget. There were increases in both taxation and user charges. Expenses are up over budget, actually down slightly from last year's actual figures. And the main reason for that, and this is a difference that we talk about every year, there was $10.4 million of amortization expense, which is not budgeted. This was $9.5 million last year. And so that's included in the actual figures you see there of just under 51 million, but not included in budget. So if you were to normalize that, the actual expenditures, excluding amortization, were about $2.6 million below budget. Capital revenues include things like government transfers, the use of obligatory reserve funds comes in and gets recognized as revenue when it's used, assets contributed by developers, gain loss on disposal of tangible capital assets. All of those things related to capital are shown at the very bottom of the statement of operations. And as you can appreciate, it's very difficult to know when exactly capital projects are going to happen. They are budgeted on a completed basis, but the most, certainly the largest variances that we see in the statement of operations in all of our municipal clients is in this area of capital revenues. So this is very common in all municipal clients. So as you can see, the budget expected about 14.6 million, but as capital projects did or did not progress as we expected, the actual was about 2.7 million. Getting into the statement of financial position, from the top, cash and investments totaled about 57 million compared to just under 50 million last year. There was an increase of about 7.6 million. Important to note that of that 57 million, about 21.5 million is restricted in use, mainly for obligatory reserve funds, set aside for development charges, as well as some government grant money that we received but had not spent. So of that 57 million, 21 million is certainly spoken for. As a change this year, and I have to give credit to my partner Jay, because he had done a couple of presentations before I did this year. This is only my second one for municipal clients. We've included some financial indicators this year. So the ministry looks at provincial averages, as well as they make an estimation of what are low risk indicators. So, I mean, comparators are just that, right? It's important to find a perfect comparator to the town of Collingwood. There isn't one. So these provincial averages certainly compare you to everyone, from the city of Toronto to the smallest rural municipality. And the low risk assessments that the ministry's made is in their opinion, and you know, we may or may not agree with it, but I mean, one could argue that if all of your comparators are poor, you know, you could look really good, or you could be in their good company. So just to keep that in mind when we look at these financial indicators. But so one of the indicators that the province looks, or that the ministry looks at, is cash and investments as a percentage of operating expenditures. We come in over 100%. Provincially, that average is about 24%, and the ministry considers anything greater than 10% low risk. So obviously a good result there compared to that, to those indicators. Taxes receivable were about 4.2 million compared to 3.3 million last year. So that represents about 7.6% of the total taxes levied. So keeping in mind that the town levies $55 million in total tax revenue, because that includes a share not just for the town but also for the county and the school board. Provincially, that figure is about 5.2%. The other municipalities that we're involved with locally here in Simcoe County range from about 3 to 11%. So we're right in the middle. And the ministry considers anything low risk under 10%, which you are. Your portfolio investment, your investment in hydro, you'll note there's a new disclosure in the financial statements this year, note 21, with regard to the potential sale to Epcor. That's included in the audited financial statements and disclosed for the readers. And of course, as you all know, this represents your 50% share in that entity. Unchanged from last year, of course. Moving into the liability section of the statement of financial position, a couple of figures I wanted to highlight. The first is deferred revenue obligatory reserve funds. So that was sitting just under 21 million. The main portion of that is development charges, and of course those are collected and cannot be spent until a growth project or a project noted in the development charges study is completed. And so 18 million of that almost 21 million is related to development charges. The remainder are smaller amounts for recreational land, parkland levy, federal gas tax monies that haven't been spent, as well as the monies set aside related to the Building Code Act. The annual repayment limit permitted by the ministry and calculated by them on the financial information return was 7.5 million, and our actual debt payments, both principal and interest, were 4.9 million. So we're under the 7.5, not by a huge amount, but certainly a margin. And then in terms of the financial indicators that the ministry looks at related to debt, they look at debt related to total revenue, and so we were at about 8.9%. The ministry considers low risk anything less than 5, but the provincial average is significantly higher than what they consider low risk, or where the town of Collingwood is at over 40%. Net assets were almost 11 million at the end of 17 compared to 5 million last year. And if you think back to 2015, we were actually in a net debt position of over $6 million. So there's certainly been an improvement in that position in the last 3 years. And this looks at simply financial assets, so cash, receivables. It does not, that asset figure does not include anything for tangible capital assets, because you can't liquidate those to pay off your liabilities. And so you were, as I say, at about $10.7 million. Many municipalities find themselves in the position you were back in 2015, where they're in a net debt position. So when the ministry looks at this factor, they're actually saying that a negative figure, meaning that you've got net debt compared to taxation and user fees, is acceptable to them. And we're not in that ballpark at all. We're in a positive of 21.9, so that's good. In terms of non-financial assets, certainly the largest one is your tangible capital assets. And as I mentioned earlier, these are not, available to be liquidated and used for anything other than providing service to the taxpayers. And also, this amount is is based on the historical cost as best as we were able to determine them back in 2009 when the PSAB rules changed to include these on the balance sheet. And so it's not necessarily what you could sell these for, what these replacement costs would be to replace all of the tangible capital assets of the town. And it includes everything from land and buildings to vehicles to all of your linear assets, roads, water, sewer lines. So what the ministry looks at is your asset consumption ratio. So it compares what the cost of your tangible capital assets are to how much you've amortized them by. And so we're at about 39%. Last year was about 38%, so that's been pretty steady. Provincially, that figures at about 35%. And you know, one of the things that's been in the news for the last number of years regarding municipalities is the infrastructure trouble that so many are into. So this is one of those that it's, you know, it's hard to compare to that provincial average. And what the ministry thinks is that anything under 25% is low risk and anything over 75% is high risk. Accumulated surplus. So this is a discussion I have with all of my councils every year because there's a lot of misconceptions about what is that accumulated surplus figure. So we were at about 218.5 million at the end of 2017. When you looked at the audited financial statement, you saw that figure at the bottom of the 2017 columns for the statement of financial position page, the statement of operations page, as well as the accumulated surplus note 13. And that's simply the difference between all of your assets and all of your liabilities. If you were looking at a for-profit, this would basically be the equivalent of retained earnings. So it doesn't mean that you've got cash of 218 million. It doesn't mean you have reserves of 218 million. It's the difference between all of those numbers. And as with all municipalities, the majority of that is used it has been invested in tangible capital assets. So you can see there a figure of 171 million. So 78% of your accumulated surplus at the end of 2017 is tied up and invested in your capital assets. And then you've got about 20% set aside for reserves and reserve funds. And I get asked that question all the time, you know, what's the right number for reserves? And that so depends on, you know, where you're at with your capital spending and your long-term capital plan and what other things you might have on the horizon. I mean, obviously the town has some big dollars coming up with both the judicial review and last night at council the news of the expenses upcoming on the terminals. And so, you know, to say that $43 million is a great figure for reserves, there's a lot that you need to consider. But in terms of what the ministry looks at, you are at, your reserves comprise 86% of your annual operating expenses. And provincially, that number is about 45%. And they consider low risk anything greater than 20%. But again, I caution you that there's lots of other considerations to take into consideration there. So that is the end of the formal presentation. I'm happy to entertain questions.
Thank you, Sue. Questions, council? Thank you very much for that thorough report. Councillor Fryer.
Thank you, Mayor Cooper. I just want to say thank you. That was an excellent summary and presentation, and very helpful to have it ahead of time to have a chance to go through. And if you see anything, you can delve through it. You talked about the comparators you used. Excellent to give us that to go by. Generally, we're favorable in all of them, and I know you'll be choosing comparators that are useful. As you said, comparing helps, but it doesn't give you everything. You talked about the other aspects of things that have to happen. But in your opinion, from a trending standpoint, as you pointed out, we've moved from a negative, I think it was about 7 million in 2013 to double-digit net asset situation, and the trend certainly looks like 2018 should be an improvement as well. So the trending is favorable in your opinion?
Yeah, the trending is definitely moving in the right direction. As I mentioned, my concern is some of the big expenses that you've got coming up that are hard to quantify. But we know they're gonna be significant, and that's, I think, just something that needs to be kept in mind, you know, depending on what other decisions you have on your plate, and there are dozens of them, I know, so.
All right, then, we have Auditor's Report 2017 financial statements, that the Strategic Initiative Standing Committee received the Auditor's Report 2017 financial statements and refer to Council for approval. Mover and seconder for that. Councillor Doherty, Councillor Fryer, all those in favor? That is carried. Thank you very much.
Can I just comment, Your Worship?
Oh, sorry, didn't see your hand.
No, I just wanted to thank Sue for putting this in a form that we can understand so readily, which has happened the last little while, but having the comparisons is really a bonus. We really appreciate that. Thank you.
Next up, fourth quarter variance report, Marjorie.
Thank you, Your Worship. I just want to remind everybody that a budget is an estimate of costs, revenues, and resources over a specified period, reflecting a reading of future financial conditions and goals. So that, in other words, it is a best guess. The surplus generated is a combination of many of the 1,950 operating account variances throughout the general ledger. Overall, tax revenues were $1,125,000 higher than budgeted. User fees and other revenues were $1,238,000 higher than budgeted, and expenses were $513,000 under budget. You will hear several times that salary-related items came in under budget, and there are several reasons why this occurred. There are timing differences in that the budgeted time of hiring versus the actual time of hiring are different. We may have budgeted for 3/4 of the year and actually only had half the year in the actual hiring time. Evaluation differences. The budget was prepared before the job descriptions were fully flushed out and evaluated. Staffing problems, particularly with the very high seasonal summer staff turnover. Our benefits, when we calculate those, they're based on the proposed increase in health and dental premiums of 21.99% respectively versus the actual increases that came in. And when we were notified of those in the start of 2018, we get notified in the start of the next year, fiscal year, what they actually are. In this case, they were actually 15.3 and 3.2. And one of the other reasons is that the benefits, non-union staff had always followed the QP settlement in terms of benefit parity, and we had anticipated a settlement in 2017, which just didn't happen until this year. When we take a look at the sectional variances, under governance, that covers the mayor and council and elections. Mainly, again, we had professional development for mayor and council under budget. Salaries and benefits were under budget. And our elections were under budget $25,000. We had anticipated that we would need a deposit on our voting equipment for the election in 2017, and that did not happen. So they've been carried forward into 2018's budget. When you take a look at corporate management, there's actually a surplus there of $974,000. And that is on the revenue side. We had increased expense recoveries from interdepartmental charges of $80,000, and that's mainly due to the fact that we recorded the payments in lieu of taxes from water, wastewater, and parking department coded into corporate management. Our investment income was about $148,000 more than we had anticipated. We had miscellaneous revenue increase of $75,000, and that was mainly due to cleaning up some old balance sheet accounts and both in receivables and in the payables. And again, if the sale of property is an item that we don't usually budget for, because we never know if it's going to actually come to pass. But the proceeds were $1,005,000, and that's due to the majority of it is due to the railway of 900 and change. But when you take into account the amount of money that was actually transferred to the Waterfront Master Plan Reserve, the net increase there was only $78,000. In terms of the expense side of corporate management, the corporate contingency account was underspent by about $34,000. Staffing related items were $54,000 under budget. Legal came in at $144,000 under budget. And this is due to the deferral of $595,000 in legal fees related directly to the current Collins share sale. And that's a basic accounting principle where you try to match your revenues and expenses. But there is a caution, if the sale of the Collins shares don't go through, then this amount will be turned over and become a full expense in 2018. Program support was a surplus of $348,000. That makes up IT and HR. The IT came in under budget in two areas mostly. The first one is in the salaries and benefits, and again, that's a full timing difference plus a portion of an evaluation difference there. That's about $120,000 difference. And then the capital, the transfer to capital for program support is all based on the standard IT, the traditional IT items that we would use, like the cabling and the software updates and new hubs and that. Whereas what we spent in hardware for IT last year was budgeted through the corporate contingency account. We had 300 and some thousand there. So there's actually 158,000 here that was budgeted that came from another account. So that's why there's a surplus there. In HR, staffing costs were under budget by about 40,000, and health and safety, there were a couple of large projects that Craig had anticipated that he didn't get through with. Fire services, surplus there of about $139,000. The revenues were about $12,000 higher than budgeted, and salaries and benefits were about $115,000 under budget. The benefits were over budgeted by about $75,000, and then the salaries were under budgeted by about $189,000. So the calculations are all based on our best guess at the time as to what those firefighters would negotiate. That settlement, again, hasn't come through until this year. Police surplus of $81,000, and that's due to the 2015 and 2016 contract reconciliation credits. Conservation, we actually collected a lot more development charges with Black Ash Creek than we had anticipated in the budget. Protective, public works and engineering. They actually had a deficit, and that's that's our winter control, sanding and snow plowing and salting, and that is always an extremely unpredictable item. We don't know if it's gonna be rainy or snowy or freezing rain or ice storms or what's coming up. Transit is not a very large deficit there. The railway, when we prepared the 2017 budget, it was assumed that the rail line would be sold in the first quarter of the year. That transaction didn't close until the end of December, so the town was able to collect the revenue for the entire year, and that's rent to Can-Do, rent from Can-Do, and a portion of the pipeline rental fee, less the taxes to the various municipalities that the rail line goes through. The airport had a deficit of 20,000, and that was due to wind turbine legal fees being a little more than we had anticipated. Affordable housing is at its normal amount. Parks, Recreation and Culture had a surplus of $427,000. I could let Dean comment to that because he gave me some very good comments on why his budget was in a large surplus position.
Thank you. Probably best to just read this, what I sent to Marjorie. So slightly more than $225,000 of the surplus is a result of the department exceeding our revenue expectations. The major variance areas that can be found are in ice rentals, where we had a variance of just over $56,000, and our lesson revenues for swim in the sailing school, we exceeded expectations by about $34,500. Our mooring fees were up to just under $20,000 a variance, and then there were other smaller variations. And I think one of the things that we wanted to note on the revenue side, contributing to the variance, was that the revenues growth didn't occur in the town subsidized minor sports areas, such as minor hockey or figure skating, as much as in the non-subsidized areas, which would indicate we've had a growth in facility use by the older age groups and commercial entities, which actually means that we're getting more dollars per hour than the subsidized rates, obviously. On the expenses side, a little over $200,000 of savings occurred through salaries and employee benefits, because parks was basically challenged by staffing shortages. We lost somewhere in the neighborhood of about 20% of our workforce by the end of the season last year, so that accumulates into a net savings for the year, but obviously also challenged our service levels. We had that salary variance also translates into our grounds repair and maintenance variance, where we were underspent on the budget by about $38,000. We didn't have staff to implement some of those activities. Another $25,000 variance in park redevelopment was realized as a result of later than expected response to application for funding support for an urban forestry grant. So therefore no spending on that budget line until 2018. And that $96,000 grant has been approved, and we'll be going forward with it this year. So that's sort of a nutshell overview of the broad areas, at least.
Good news, thank you.
Planning had a surplus of $216,000. The planning fees were $110,000 higher than budgeted. Consulting fees were $14,000 under budget. Salary-related expenditures were $20,000 under budget, and that is due to the director having reached her maximum OMERS contributions, and we no longer have to contribute for her. The OMB costs were $25,000 under budget, and her studies account were $17,000 under budget. Heritage is an allocation of salaries, and not all of the grants were, they had been applied for, but not all of them were completed, so the monies were just there. Marketing in the Business Development Center, that's just a combination of increased revenues. Martin does seem to be able to find it. And the fact that this year the Small Business Enterprise Center was funded in terms of in-kind support as opposed to cash support. And the library, for the library, we had higher transfers from development charges for the collections. About $58,000 of that surplus was in increased development charge transfers. And the materials budget that we increased to $80,000 last year was $10,000 underspent. So that is,
I can speak to that
Ken, if you wanna.
Sure.
Welcome, Ken.
Yeah, that was unfortunate. What happened was I lost 4 staff, 2 part-time and 2 full-time towards the end of the year, which meant that that particular job description, the collections part, was not occupied by anybody, which meant for a while we weren't ordering anything until we got a new person in place. The problem is when you're ordering books at the end of the year like that, they don't come out of that year's budget, they end up getting carried over into this year's budget. So that's why we came in under $10,000 in the collections. And it was just unfortunate that 4 people all decided that they were gonna leave at the same time. It wasn't, I didn't foresee that happening. It just sort of did. And so stuff doesn't get done. But I would hate to think we don't need that money this year. I guess I don't want that to be the message that goes out, because we really do need to beef up our collections, particularly certain parts of it.
Thank you.
So after all of the departmental expenditures and revenues are taken into account, we actually underspent by $2.3 million. We take a look at the taxation revenues. Again, there were a large number of supplementary tax bills. However, at the end of the year, there was also an extremely large ARB decision related to Home Depot that was about $700,000 cost, roughly. So that nets our surplus down to, it increases our surplus to $2.8 million. So the surplus allocation, all of the allocation is based on the surplus management policy approved by Council August the 21st of 2017. Transfers to maintain target balances in the following funds. We transferred $374,000 to the capital contingency reserve to keep it at its $1.5 million. We transferred $49,900 to the general reserve to keep it at $500,000. The operating contingency reserve, which is equal to the amount of tax dollars, the tax levy, 10% of the tax levy in the prior year, required $32,913 to be transferred in there to bring it up to where its estimate should be. We had $95,000 more in the working capital reserve fund than what our target balances were based on, which is 5% of our net taxation, our net taxation revenues from the MIR. 10% of that remaining surplus was used to reduce internal loan balances. $251,000 was applied to 507 10th line purchase. So we're now down to an outstanding balance of about $1,560,000 in internal loans. So for 2017, that is a total reduction of $752,000 in internal loans. 60% of that remaining surplus was transferred to the Life Cycle Replacement Reserve Fund. That amount was $1,358,000. 10% of that remaining surplus was transferred to the 10% non-DC Growth Reserve Fund, and that was $90,550. And the remaining funds transferred to those funds that have not reached their target. The winter control reserve, we will see later on that the target for that is based on the average, 25% of the 5-year average of the costs. We had it sitting at $300,000. When we do the calculations this year, we're required to add $23,930 in there. Again, with the 10% non-DC growth reserve fund, that's, we try to keep that balance. Our target balance there is based on 2 years worth of requirements in the capital for the future budgets. So we needed to increase that by $472,000. The life cycle replacement reserve fund, which again is based on having maintaining 2 years in the capital fund, we had to transfer in another $332,000. The land acquisition reserve fund, the target balance for that is $1 million. There was $13,706 more in that, so it was transferred out to some of these other items. And that's it.
Thank you very much, Marjorie. Questions, council? Councillor Jeffrey.
Thank you, Mayor Cooper. I guess my question through you to Marjorie is, are there any, I don't know if you'd call them lessons or changes or recommendations we would make? Although I understand it's a best guess, I think in situations such as wages forecast, if we're still working on our budget in May and we haven't hired anybody yet, it's pretty clear it's not going to be a full year overall. I don't know what those impacts do, but is there any way to hone our best guesses? It's good news in one way, but I think for the taxpayer, that's a pretty big surplus.
Ms. Leonard?
Through you, Your Worship, I would say that it was very unexpected surplus in that way. But given the combination of items that created it, the one thing that will be done this year is, for 2019, is that the benefits increases will, I'll be very, very conservative on those. I might be under, or might not budget enough for them for 2019, but that is one of the bigger areas that we had. In terms of the revenues, interest rates went up. We lucked out because we have a large amount of cash in the bank. We were making more money on our bank account than we would make in a GIC or any other type of investment at that point in time. The user fees, they did increase, but in terms of Dean's department, those increases were just based on usage. I'm not. We can only try to do better to come closer.
Appreciate that, thank you.
Council, are you finished?
I am, thank you.
Councillor Edwards, did you have your hand?
No, not really. It's just good to see the increased usage on all the facilities. Certainly,
Deputy
so
Mayor.
it's good news, and you can really. Oh, sorry, Your Worship. You can't really estimate those. I don't think, really.
Thanks. Deputy Mayor.
Yes, thank you, Mayor Cooper. Through you to Marjorie. 2 questions. The first one, Marjorie, is the life cycle reserve fund. Is that the fund that's put in place for the asset management plan and the capital levy?
Through Your Worship, yes, it is.
Okay, and in terms of the balance that we're trying to maintain in that, is that based on the Watson report? Like, are we trying to catch up with that, or how are we approaching that?
That at this point in time was a sort of a rule of thumb. If we're trying to keep up with the Watson report, we need to put $4 million for 2019. And when we bring forward the 5-year capital plan, I can talk about this. But for 2018, 2019, we should be putting $4 million away in that reserve fund. This year, for 2018, we'll get $1,500,000 51 for sure. And it'll all be dependent then again on the portion of the surplus that's there. So we are sort of underfunded, but we're spending it, we're trying to spend it conservatively and in the best manner that we possibly can to get the biggest bang for our buck and save in the future, save larger repairs and repair costs for that life cycle, but that's what it
And
is.
just to follow up, so you're indicating that'll be part of the 2019 budget discussions, that will be earmarked to go into that for next year?
That is correct, Your Worship. Yeah.
Okay, thank you. And
Council-
one other question.
Go ahead.
Thank you. At the county, they've discussed, and you and I discussed this directly on the excess, or not excess, but additional surplus municipal taxes through assessment and also new growth. The county's adopted a policy of either putting that into debt reduction or capital reserve for, future costs from those developments and the burden on our infrastructure. And what was do we know what our municipal assessment growth, do you have an estimate of what that was for this year?
So far for 2018, we took a look at it at the 31st of May, and it's actually 2.03% in terms of assessment growth. When we compare what we have done here to what the county does, the first thing that we have to realize is we have all of those debentures that are fixed, right? So our long-term debentures, we can't pay down without a lot of additional penalty on it. So we do have the internal loans, which we are paying down as we go. And through the reserves, the bottom line reserves that we're getting, we're not incurring any new debt at this moment in time to provide. I think the last 2 or 3 years, it was $9 million, I think, out of the reserves to accomplish a lot of capital improvements because we received federal and provincial grants to do that. So it does go back down to the capital reserve for future.
Okay, good, thank you, those are my questions.
Mr. Amin?
So just a comment on the asset management piece. I mean, I think that's an area of vulnerability, and I did actually speak to the auditors about this and to staff as well. And I just want to caution council that, while we might see that we're continuing to invest in contingency fund to deal with asset management, I still think that we probably wouldn't get an idea of what it is in terms of fiscal exposure until we complete the asset management plan. And secondly, there are a bunch of requirements coming down from the province regarding the state of investment and state of good repair, all of which we have to comply with. So, I mean, I think that's an area we need to be concerned about, and that's an area that I think we'll probably put some emphasis on in the 2019 budget. So, it's a good fiscal picture. We continue to set aside money to deal with that vulnerability, but I still think that we've got some financial exposure in that regard.
Councillor Doherty.
Thank you, Richard. And I'm going to comment on the surplus, but sort of from the opposite perspective, perhaps as Councillor Jeffrey, and that is to say, when we achieve that high of a surplus, what have we not delivered to the taxpayer who expected it?
Ms. Leonard?
Through you, Your Worship, in terms of the increased revenues, which accounts for a lot of it, we did not, I don't put the negative of it is, we did fulfill a lot of the services that the users and the taxpayers were expecting. When we take a look at the expenses at only being over $513,000, I believe it was, from budget, we have 200 and some in the area of Dean's department itself, where the parks didn't get the grass cut every week. Those were the types of things that we didn't get to.
Dean?
Yeah, sorry if I could put a face on it, thank you, Worship. So projects that people will notice will be things like the boulevards. last year were left fairly unkempt. It's a large project and we didn't have the staff to get to it. Requires traffic control. There were certain standards in parks that we adhere to which were not met. Mostly aesthetic, I think, is probably, I don't want to scare people, but that we had to leave a lot of that detail that we take a lot of pride in off the table because the hit on our workforce was pretty significant. Ironically, we know, for example, that certain fees at the harbor were not collected despite the fact we were over budget on mooring revenues. A lot of fees weren't collected simply because we didn't have the staff to be on site at the harbor collecting the fees. So those are the kinds of things that would have contributed to sort of a differential in service from what we would normally want to see. And it was definitely a challenging year, as most of them seem to be these days. But yeah, I mean, as Marjorie mentioned, by and large, we hit our service targets. I would say there was definitely a quality impact at some point.
Councillor Doherty.
Thank you, Your Worship. The NBCA have taken or have made a decision to hire contract people to deal with their engineering services backlog. And I'm wondering if that is something that we can consider.
Dean?
So through your worship, we have committed to this council that next year we would undertake a review of services to determine whether contracting was a desirable option. I will say that logically speaking, it doesn't hold up in my experience. The contracting of services, a contractor has all of the expenses I have, and actually typically will pay a higher wage in many cases than what the town pays, carries all of the equipment and has to earn a margin on top, whereas we don't have the margin responsibility. So just on a logical framework basis, it's going to be a challenge to look at that as supplanting town services and how we provide them. Having said that, I'm absolutely eager to go down that process and have a review that looks at contracting as an option. In a short-term emergency basis, it wasn't possible for us to get contractors to actually respond. So they're busy filling up their schedules long before we came to the problem of having 20% of our workforce compromised by the end of last season. So it wasn't an option for us. In every case, we did employ contractors, no question, but it wasn't an option for us to simply replace the services that we provide with contracted services.
Councillor?
Oh, I just want to say, I think we'll leave that debate for the next meeting. I mean, I don't want to preempt any potential outcome or prejudice that outcome, and I think we'll wait and do the analysis before we make a pronouncement on which one is the more efficient and effective from a customer service and cost perspective.
Absolutely.
Okay. Is that it, Councillor Doherty?
I'm just, as we move closer to true program-based budgeting, is this an area that we can see some tighter budgeting and planning improvement?
Well, I mean, I through you, Your Worship, I mean, I think we need to do this kind of an analysis across the organization. And perhaps what we do is pick one or two program areas initially to do that kind of deep dive. But I think we'd have to do a value for money efficiency program review piece so that we understand what's in each department head's budget and look at ways of delivering that potentially more efficiently without compromising public safety or customer service. But I think that's a broader discussion, and that's a discussion that we'll probably have to have. We also need to recognize that we have to do that within the context of our bargaining partners as well. We've got bargaining agents across the organization that we have to work with and partner with and try and do this in a way that respects the collective agreements that we have with them as well.
Thank you.
Councillor Fryer?
Well, thank you, Mayor Cooper, and thank you, Marjorie, for the presentation. It's a very good situation to be dealing with. The alternative is not good. So But even your guesstimate from the third quarter, it's even higher than that had been. And I know generally in the revenue side, you're conservative on your estimation, and I can well appreciate that. What did your supplementary tax amount come in? And if I remember correctly, I think you had said it was $1.3 million and you budgeted $3 million. Is that correct?
Through you, your worship. It came in at, it came in at 1.3, and then we had that extremely large ARB write-off of 700,000, so it kind of, we really only netted 600 in that.
Yeah, and I was pretty sure that 3 was the amount you put in. With regards to having a surplus like this, and I think it's very important that we communicate to the public, we have this surplus allocation policy, and essentially it achieves what I think the county's aiming to do is to get a lot of the money back into life cycle replacement. And I when I saw the reports that you've given, I looked at your target calculation page, specifically at life cycle, and I recognize you don't have a target. What you do is you maintain what the ministry says, which is you need to have 2 years of expected capital expenditure coverage, right? Eventually, we may internally establish a target based on seeing the capital asset management plan when it comes to us, and we know that the projections about the assets aren't just based on depreciating values. It's going to be on expected life. So I'm pleased that we are covering that, but I recognize that it may not be sufficient. We're waiting for that other data, and I know you already intended on getting us that data a lot sooner than it's happened. So I just wonder what your projections are on when you feel, I know you're doing that major study right now, but when do you feel you'll be in that stage where you can give us a capital asset management update?
Marjorie? Through you, your worship. We've actually developed a 5-year capital plan that we're just finalizing right now. In terms of the capital asset management plan itself, we have the roads conditions assessments in the database now. We have the bridge assessments in the database now. We're working on the sanitary sewers based on the videoing that was done 2004, I think, whatever it was. We'll also be working on the water, and the only other core asset that we really need to deal with is the stormwater management stuff. So if we were to look at some of the reports that we can get out of the system now on roads, I'm not Director of Public Works, but I believe that the reports that he has seen and can get out of there have been helpful to him in helping with the 5-year capital plan that we have. So by July 1st, 2019, we have to develop that strategic asset management policy. And by July 1st, 2020, we have to have our core assets in the capital asset management plan. I want to beat the 2020 date. I would like to have it 2019 around this time, because we'll be also doing our development charges in the water and wastewater studies, so all of that stuff will be there. We can expand the capital plan to the 10 years and really get things going.
Thank you, Mayor Cooper. Just, I believe that's true. I think a lot of the information is coming together, and the next phase of setting of rates for, as you say, water and wastewater, which will be very important, and it needs to correct some things that are not properly set right now. So I again, as I said, it's good to have the surplus. I felt that we could end up in a surplus situation when I was going through the budget deliberations, but as I said, the alternative isn't any good. So we'll move forward with it, and it does give me some comfort knowing that the life cycle reserve has moved up to that kind of level that at least is covering what the ministry would require until the ministry tells us what their next requirements are, right? And as you say, hopefully we'll be ahead of that game anyway.
Thank you, Ms. Leonard. Next, we have T 2018-04, 2017 Statement of DC and Cash in Lieu Parkland Reserves Funds.
Thank you, Worship. This report is being submitted as a requirement of the Development Charges and Planning Acts as amended through Bill 73, the Smart Growth for Our Communities Act. This Section 43 of the DCA requires that the Treasurer provide a financial statement to Council relating to the development charge bylaws and reserve funds established under Section 33 of the DCA and similarly Sections 37 and Sections 42 under the Planning Act. The annual Treasurer's statement provided to Council must provide a report on detailing reporting on bonus density contributions, which is the Planning Act Section 37, received from development and how those funds are spent by the municipality. At this time, we do not have a Section 37 bylaw in place in order to collect those funds. We would require a detailing report of cash in lieu of parkland funds, which is the Planning Act Section 42. And we do have a bylaw for that in effect. And have to provide a statement of compliance, which is signed by the Treasurer, confirming that monies collected from development are only those allowed under the development charges for another act that became effective on 1st of January 2016. So what we see here is the summary of the development charge funds that we have with the comparisons for 2016. So the balance at our beginning of our year was $14,700,000. We collected $4.7 million. We had interest income on those funds of $225,000. We transferred $306,000 to operating, and that is the collections for library. It goes to the operating funds. There was a study or two of Nancy's that relates to the official plan that we're in operating, and it's the Black Ash Creek development charges again that are sitting in operating. And we transferred the $1.2 million to the capital funds, and that left us $18,106,257 at the end of the year. But $9.8 million of that balance has been committed in the 2018 budget. The Parkland Reserve is similar. In this particular case, it's the 3% for commercial and 5% for residential development that gets collected. We started with 87,000. We collected 62. We had interest income there of over 1,500, and we had no usage last year. So the balance at the end of the year is 150,000. Now we can use the parkland levy money to purchase parkland as long as it has a growth-related component. Is that correct, Nancy? Yes. Yes. And we can also do that to expand any of our recreation services as long as, or I shouldn't say services, I should say equipment or facilities in if there is a growth-related component to that. So this year we haven't spent any of that. I don't think we've spent any so far this year either. So the report that is attached does detail which, it's too small to read on the screen. It's almost too small to read printed, but it does detail exactly how much was spent on each of the projects that were allocated this year, how much the taxpayers themselves spent. We also have the remaining credits on our front-ending agreements. The total of the credit balances for the front-ending agreements are $1,022,000, and I believe it's Mountain Croft is the vast majority of the outstanding credits. And as they continue to build out, they continue to draw down on it. And I will state for the record that the municipality is compliant with section 59.11 of the Development Charges Act, whereby charges are not directly or indirectly imposed on development, nor has a requirement to construct a service related to development being imposed except as permitted by the Development Charges Act or another act.
So noted. Okay, any questions? Councillor Fryer.
Thank you, Mayor Cooper, and through you too, Marjorie. Marjorie, you mentioned about the committed for 2018, which seems to me like it's high number, 60% of the fund. Does that bring you concern? I saw that the net transfer to capital was only 1.2 the previous year, so is it some carryover from last year?
Through you, Your Worship, yes, it is a timing difference. There was, I think, if I remember correctly, we were going to budget something like 10 million in 2017. So of course, those didn't get done and they're being carried forward this year. So it will be 2018, think about it.
Yes.
And your expectation would be we'd see a fairly sizable collection again this year with the growth that we're going through.
Yes.
Just a question of interest out of that. If there is a rush to pay educational development charges, they have to pay the whole development charge, don't they, if that happens? Yeah.
Through
I
Your
wonder.
Worship, yes.
Okay, recommending that Strategic Initiative Standing Committee support and refer the following staff report to the next regular meeting. Council Staff Report T 2018-04 be received for information. Mover and seconder. Councillor Lloyd, Councillor Doherty, all those in favor. That's carried. Moving on to T 2018-05 Statement of Reserves and Reserve Funds and Adequacy Review Report. Marjorie.
Thank you, Your Worship. Overall, this the Statement of Reserves is actually a two-page report. If we were to go to the next slide, the bottom line there shows that the overall reserve balances grew from $5,786,000 to $5,986,000, or an increase of just a little over $200,000. However, you have to remember that these balances do include a couple of reserves that the town holds in trust, particularly for the library, and that's about $54,500, and the amount for the BIA at $221,000. So these are all discretionary council created reserves, and the only increase in the ones that council does have direct control over was only about $146,000. This next slide shows the obligatory or statutory reserve funds and our discretionary reserve funds that we created last year. The obligatory reserve funds increased $971,000. And again, those ones are for legislative purposes or a specifically defined purpose through a financial agreement. We show a new one on there of the OSIF funding, I believe it is. It's about $33,000 if I'm not mistaken. And that is our formula-based funding that we did not spend last year. Part of the agreement says you create a reserve fund, an interest-bearing reserve fund, and you place it in there. That's the funding that we use mainly for the asphalt resurfacing type of projects. But those funds can be carried forward for 5 years, as similar to the federal gas tax monies. The 2018 budget has committed $847,500 of the federal gas tax funds to capital projects and $400,000 of the OSIF funding to capital and operating projects. So for 2018, our federal gas tax allocation will come in at about $612,000. So we'll still have a balance there at the end of 2018 in that one. And we should receive about $525,000 in OSIF funding there in 2018. The discretionary reserve funds, we had an increase there of $6.8 million for a total balance of $37,869,913. The largest components of these funds are the life cycle replacement reserve, the water and the wastewater reserve funds. And from those three reserve funds themselves, the 2018 budget has committed $10,232,000. Assuming all the projects get completed in 2018 that we've got budgeted. Okay. And with the adequacy, if we take a look at this, and in the staff report, you'll see the calculations that we base everything on. This report indicates that there is one reserve that's underfunded and one reserve that is overfunded. If we take a look at the accessibility reserve as being underfunded, I believe that that will be made up over the next year or two through what is not spent in the accessibility accounts in the financial statements, so I really don't consider it as underfunded. And in the Mayor's Golf Tournament, it shows it is overfunded. However, I believe that that will again diminish or decrease over the next couple of years. So I don't anticipate that it's overfunded. The library's accounts and cultural services, I don't consider, there's nothing in there that looks out of the ordinary. In terms of our discretionary reserve funds, it indicates that there are three funds that are underfunded: Heritage, Life Cycle, and the Waterfront Master Plan. The Heritage Reserve Fund and the Life Cycle Replacement Reserve Funds are expected to reach their targets during 2018 with the transfers that are going to be coming in. For instance, Life Cycle Replacement Reserve has enough to bring it to the $5,479,000. We will have that at our target balance by the end of 2018. So we have a minimum of $1,551,000 to be transferred in there. The Heritage Reserve, I don't consider that one unfunded. It was originally set up to have a $10,000 contribution for 3 years in a row until it reached $30,000. It will be there at the end of this year. And I don't consider the Waterfront Master Plan to be underfunded at this point in time. I believe that we have enough money in that account to fund the project, the Indigenous Gathering Space project that we are working on this year. In the future, I believe that we will need to relook at how we fund the Waterfront Master Plan on a go-forward basis. But other than that, Your Worship, that would be where we're sitting.
Okay, thank you, Marjorie. Questions for this one? Okay, recommending that Strategic Initiative Standing Committee support and refer the staff report to the next regular meeting of council. Staff report T 2018-05 be received for information that the recommendations contained herein be approved. Mover, seconder. Councillor Jeffrey, Councillor Doherty, all those in favor? And that is carried. On to the next, T 2018-07 2019 budget process and target. Marjorie.
Thank you, Your Worship.
Wait, is it June still? Budget process and target.
Yes, this staff report was initially introduced in October of 2017. The staff were asked to go back and make some changes to it. I have here, this is the original presentation that I did at that time, I have made only very few minor changes to it. But this staff report and the policies attached were introduced on October the 11th of 2017, and at that time the report was deferred, and staff were asked to amend some areas of the report and bring it back to the committee. The amendments that I have noted in the current staff report are that we did have the overall net levy increase, be it the core rate of inflation for the Toronto area, is at July 31st. We have subsequently changed that to, or we want to change that to June 30th so that it coincides with the indexation provisions of the fees and charges bylaw. We've done the same thing there with the assessment growth estimates. We'd like to use the June 30th date for that. I should say that the CPI, the core rate of inflation, based on the fees and charges bylaw, is the Canadian CPI. That all fees and charges excluding water and wastewater rates be indexed at the same rate of inflation unless precluded by legislation and new revenue sources identified where possible. We've removed that recommendation simply because the provision of indexation was added to the fees and charges bylaw. And just if you go to the next slide there, right? Just to refresh everybody's memory, the budget principles policy establishes the principles for ensuring fiscally responsible decisions with respect to services offered, service levels offered, and other uses and application of taxpayers' funding, while considering the long-term and short-term impacts to both the corporation and the taxpayers. The guiding principles: open and transparent process. We will continue to post all budget-related documents on the website for public review, and we'll be working on enhanced public engagement in conjunction with the communications officer. That area of the policy itself has been expanded to state the commitment of the town to open and transparent processes in all decision-making aspects of its operations. We've also defined meaningful and effective public engagement as being characterized by being representative of the broader community, offering an opportunity for input early in the process, being open and accessible to everyone, having goals and expectations articulated at the outset, having input valued and considered in the decision-making process, and reflecting the true priorities and preferences of the community members. So in aid of that, I've been working with the communications officer to develop some survey questions that we would like to put out on the website. We're looking at having a Saturday morning at the farmers market with the surveys and talking to the community to see which way they're going. This, of course, would all be prior to actually having an initial preliminary budget number calculated, and then we would continue with that type of engagement after we had a presentation that gave a preliminary, this is where we're going. And again, this budget target and policy that we're asking for is just for a starting point so we can prepare those preliminary figures to provide to the public and to the council members themselves. The second principle is promotion of the fiscal responsibility through strategies such as cost avoidance, cost control, cost management, and cost reduction. And again, this section has been enhanced to state the commitment of the town to program-based budgeting and its importance in where we will be going in the long term. And again, our final one was a predictable tax increase, and that is through establishing a budget target, allowing the financial aspects of the budget to be initially constructed more efficiently to meet expectations, which in turn allows the focus of delivery funds to shift to service, to shift to delivery of services. And the assessment growth policy, we have made no changes to that. It dedicates assessment growth to funding the areas of the budget that incur costs to provide existing core services to new growth areas. New revenue from growth is necessary funding to extend existing services at their same levels to these new residents and businesses, which results in additional costs and in some cases additional staffing requirements. We just can't get away from that. You have 3 parks, you've gotta find another person to cut the grass. And again, if the assessment growth funding exceeds what we've calculated as the accumulated growth costs in any one budget year, the balance will be applied to reduce internal or unissued debt. And then if all the internal or unissued debt has been fully paid, any excess growth funding shall be used to offset the base budget property tax requisition, which would be the carry forward of any of the prior year's expenses that have been added in there. And I really do want to stress that we just need a starting point so that we're all on the same page, and that's really what the budget principles and assessment growth policy are all about.
Thanks, Marjorie. Questions, comments? Councillor Jeffrey.
Thank you, Mayor Cooper. Through to Marjorie, I am very much in favor of an easier process to get started for sure. The only kind of caution I have is to set an inflationary rate on what we know already to be a significant surplus position, because we typically just take the last budget and increase it by 1 point whatever, and then all of a sudden we already have a $2 million surplus, and we had a surplus the year before. So what's the baseline that you start putting that on top of? I guess that was my concern.
Through you, Your Worship, what we have been actually doing in the past, and we will probably continue to do, is that we will start with that base budget, but as we have a knowledge transfer here between myself and the next guy, we'll take that base budget and go through there and take out all of the one-time expenditures, because we know there are one-time expenditures. And we'll take a look at the items that were, like for instance, the benefits, where we had them over budget. We will take a look at those numbers and come up with a better method. And then we provide that as a suggestion to the department heads for their increases or decreases, efficiencies or unavoidable increases, to come up with what we have for a base budget. And then department heads will have, of course, unmet needs, but have them on the side.
Reid.
Thank you, Your Worship. Through you to Councillor Jeffrey as well. I mean, I think the issue also is, I mean, I've had this discussion with the department heads. I mean, I'm not a big fan of adding every year a certain minimum component to each budget. I think we've kind of examined what's in the base budget before we keep adding, whether it's inflationary increase or staff increase or whatever else. I mean, I think we can use those indicators as a discussion point, but I think to my earlier point about program review, I think we've got to look at exactly what's in the budget, and there might be situations where there are certain departments that require much more than just inflationary increase and some don't. So I think these are guidelines, these are principles, but I think we'll have to be a bit more rigorous as we get into the whole issue of program review, and also looking at different ways of delivering better services.
Councillor Edwards.
Yeah, thank you, Worship. Through you to Marjorie. With the amount of growth that we're experiencing, Marjorie, how do we basically get that into the budget when we really don't know when we're going to get that tax come through from the assessment? So how do we figure that?
Through you, Your Worship. A figure that I quoted you is that 2.03% is actually from impact reports, and they do provide us with an in-year growth report, which is where I have been getting the numbers from for the past 3 or 4, actually longer than that, the past several years. So when I say there's a 2% increase in growth, I have an impact report that says that's what your in-year growth is. That's those 177 units that came online in February this year that should have been online last year. That's considered in-year growth. So I do know that I will have that amount in terms of the 2019 budget.
Yeah, so we calculate what we physically know as opposed to
Totally.
what we feel will come on stream. Okay, thank you.
Deputy?
Yes, thank you, Mayor Cooper. Through you to Marjorie and staff, I think this is a great report, thank you. I think it's a real development on the program-based and budgeting changes that we've introduced and made throughout the term of this council, and I guess maybe to tug a thread that the CAO raised, there's a comment in here that over time it's expected that the program-based budget process will evolve into program performance budgeting, and I think that's really where we're headed, to find efficiencies and every year evaluate the aspects of services we provide to make sure we're providing maximum return for our citizens. And I do in particularly like the citizen engagement aspect to it, and I know there's, I'm hoping that we can look at with the new iWebinar program we have for hosting our platform here. There are, I think, add-ons you can get that can invite open engagement through either, there's an operative platform, I think, where people can come in and they can play around with the budget and they can find out, if I want you to spend so much more in a different area, this is what it means to the bottom line. And I think that this type of engagement with the public is excellent, and it helps us understand what they want, and I think it helps them understand the process that we have to go through, and it's a balancing act and it's a continuum, so you can't lift one area without either lifting the whole thing or reducing somewhere else. So yeah, I think this is a great map forward, and congratulations to all on that. Thank you.
Councillor Doherty?
Actually, I echo the Deputy Mayor's comments. This is a great platform upon which to start our planning for this year and going forward.
Councillor Fine, questions?
Thank you, Mayor Cooper, and I too echo, I think we talked about this when you introduced it first last year. This is appropriate, and we want to carry it through. Some specific questions I had were, I know I can well appreciate having a known number. If you're going to put this set of different budget scenarios together for us, to have a starting point that you always know what it is, you don't have to come and get it every time. And I can recognize looking at CPI as a feature, but as you say in your report, CPI doesn't necessarily apply. So I'm really looking forward to where MPI, the municipal price index, gets to that point. So I guess, why not just a fixed number? Like, why not for that starting point? Why not just like 2% or 1.75% for now until that MPI is there?
Marjorie?
Through you, Your Worship, we want the MPI just to be a benchmark number. The CPI itself has evolved into actually 3 separate components, and I believe that, and Mike can correct me on this, it's the CPI-X that most municipalities are using, which is just a specific core. Mike, can you tell me which ones it leaves out? I can't remember.
I can't recall, but we can get this information, let you know what the comparison is between the CPI and the CPI core index that other municipalities are using.
Mayor Cooper, I don't know that that's necessary. It was just more philosophical, I think, as much as anything, because I know if somebody's talking and I'm explaining budget to somebody, I'm going to say, well, they're using CPI, and the first question they're going to say is, what's the CPI figure that you're using? So it's just a matter of logistics as much as anything. The idea that you have about assessment growth, I think, is fantastic. I think we can't look at growth. We have to recognize growth can be a bit of a Trojan horse, and once the party's over, all of a sudden the impacts are there that you weren't expecting. So I like the suggestions that are being made about establishing that is being put towards. And it does touch back on what we talked about before. We need to know that money is going towards the variable cost that increases when we increase population. So I had a note there. In the allocation of it, there's the guiding principles in the policy, and under F it says, if an internal debt or unissued debt has been fully paid, any excess assessment growth funding shall be used to offset the base budget property tax requisition. can you explain to me what the base, of the 4 scenarios that you're using, are you saying you're just gonna reduce the base on all of them?
Well, through you, your worship, in the event that the other items are all covered off and I'm still left with $50,000 that I don't have for internal debt or I don't have for incremental costings, then we'll just leave that in the budget and reduce the amount of taxes, the tax levy for that year by $50,000.
And
Question?
Council can tell me to put it in a reserve, it's entirely up to you.
I think it's appropriate because it is, you're putting it against the base, right? So that, but I wanted to follow up on the CAO's comments and I'd like to hear that. I expected it anyway, like that you would be having those internal conversations and looking at that interdepartmental and as it's explained in the policy and the explanation in the report, departments would have to justify the variable cost increases, whether they're salary related or other, and then what the CAO is saying, they'll have to justify any changes, whether they're caused by growth or other factors. So I'm glad to hear that. Expected it anyways, but.
Okay, recommending that the Strategic Initiative Standing Committee support and refer the following staff report to the next regular meeting council. Staff report T 2018-07 be received and the following recommendations be adopted. The overall net levy increase be at the core rate of inflation for Canada as published by Stats Canada as at June 30th. That assessment growth estimates as at June 30th are incorporated into the base budget and used to fund growth-related incremental costs, and the council approved the budget principles policy and assessment growth policy by enacting by law to 2018, whatever. Mover and seconder.
I'd move all that.
Okay, Councillor Fryer, thanks. Councillor Lloyd, all those in favor? That is carried. Move on to T 2018-08 tax relief deferment programs. Marjorie.
Thank you, Worship. Better turn that on. Thank you, Worship. This one I didn't have a presentation done for. And it actually is that we were asked to take a look at a tax relief or deferment program similar to the programs available in the City of Toronto and the province of British Columbia. I did a fair bit of research on these programs, and the short answer to the feasibility of the town offering a program such as this is actually contained in Section 319 of the Municipal Act. 319.1 states that for the purposes of relieving financial hardship, a municipality other than a lower tier municipality may pass a bylaw providing for deferrals or cancellation of or other relief in respect of all or part of a tax increase for 1998 and subsequent years on property in the residential property class for persons assessed as owners who are or whose spouses are low-income seniors as defined in the bylaw, or low-income persons with disabilities as defined in the bylaw. Now, I did find out that, of course, the City of Toronto is an upper tier, it's a single tier, so it can do whatever with this. The program that's offered in BC is actually the provincial program, which is similar to the Ontario property tax credits that you get when you file your personal income tax returns. The difference being that it is administered at the local municipal level and it comes off your taxes, right? So in this area, the Collingwood residents would have availability for the province of Ontario, which again, as I said, is the main form of property tax relief, and it is filed with your personal income tax. And the maximum, the maximum grant for that is $500. In 2004, the County of Simcoe passed bylaw number 5022, which is to provide assistance to certain low-income seniors and low-income persons with disabilities who are owners of real property that county is Simcoe. And this program relates to tax increases due to a general reassessment. Now, in terms of the town of Collingwood, we have this item called Section 357 of the Municipal Act, which is part of the program that the county offers. And the town itself has delegated its powers under Section 357 to the Assessment Review Board. So, and in part because it does involve income assessments that you make to see if they fit the levels or whatever. So anyone who feels that they would qualify for that, and they could talk to our tax collector, who's quite knowledgeable with that, and could help them perhaps fill it out. But if they were to fill out one of those Section 357 forms, we would forward it to the ARB and they would hear the appeal. And I'm sorry, Councillor Jeffrey, but that's the answer.
Thank you, Marjorie. I'll entertain questions at this point in time. Councillor Jeffrey.
Thank you, Mayor Cooper, and through you to the treasurer. Thank you very much, Marjorie, for looking into that. I don't see anything really comparative to what they're doing in the other places in the terms of deferral. And so I understand it's not our authority, but I wonder if our role isn't some advocacy work with the county and or the province to have the ability where we don't lose the income, but we simply defer it and it gets paid at a later date. And I think that deferral is a better situation in terms of this, where you reduce, refund, or cancel all or part of taxes levied on the land. I think the point is you maintain that revenue stream at some point in the future. So I don't know if there's an opportunity there for us to advocate that point of view through our upper tier partners.
So just asking, when would you expect then the payment to come in if it's a deferral?
It would come in through the estate.
Street like back tax.
Yeah, or sale. If the property were sold, it would automatically come due, but then it would go through the estate if not. So I think that would be a better situation financially for municipalities.
Well, if you would like to prepare something.
I will do so.
Any others? Councillor Fryer?
Thank you, Mayor Cooper, and through you and not necessarily to treasurer. I appreciate the report. It's very detailed in that regard. So I think the other part would be making sure the residents in our community understand what's available to them. So that wouldn't necessarily be coming out of our department, but maybe through, maybe that's something I'll keep in mind for when we're visiting the 211 and asking about certain information services that they're delivering, and see from there and bring that back.
Other questions? Okay. Recommending that Strategic Initiative Standing Committee support and refer the following staff report to the next regular meeting of council. Staff report T 2018-08 be received for information. Mover, seconder. Councillor Jeffrey, Councillor Doherty, all those in favor? And that is carried. Next, 2018-09, status of capital levy. Marjorie.
Thank you, Worship. I was asked to prepare a report on the status of the capital levy. And the slide up here does show how much we have collected and how much interest has been added. That amount actually sits within our life cycle replacement reserve fund. And when we passed the policy on the life cycle reserve fund, the special capital levy was mentioned as being a component of the annual transfer to that fund. It's in terms of potential other uses of the capital levy. It's discretionary reserve fund, meaning that council established the fund and council can change the fund by amending the bylaw. I wouldn't recommend that right now until we're up closer to where we need to be on what we should be putting away annually for our capital asset management plan. And if you take a look at the next slide that we have, this is actually a recap of the transactions that have gone on through the life cycle reserve fund for the last, since it was established in 2010. And without those funds, we've actually, there's $6 million worth of capital improvements, rehabilitations that would not have been possible without those funds. And at this point, if we don't continue at the level that we have been continuing at, we will not be able to keep up funding a lot of the projects that are coming up in the next 5 years. So that's the status of it.
Thank you, Marjorie. Questions regarding this one? Deputy?
Yes, thank you, Mayor Cooper. Well, I guess this goes to the whole discussion about the asset management plan and how you're going to move or meet future needs while responding to current requirements as you go. So it's a philosophical discussion, I think, moving forward. And as the CAO has pointed out, we do have some exposure on the asset management plan front. So it's a balancing act. And I guess that's something we'll have to wrestle with moving forward. But once we have our 5-year capital plan, and that will give us a short-term idea, and then we get our asset management plan together and all the information that will be critical, I think, to helping us gauge the appropriate balance. Thank you.
Questions on this one? Councillor Fryer.
Thank you, Mayor Cooper. Since it is going into the into the life cycle reserve, would it be better to just make whatever adjustments we need to make to no longer call it a special capital levy?
Through you, Your Worship, I would offer that we retain it as a separate levy on the tax bill itself, so that they can see that we are collecting funds directly for the capital improvements. So when their road gets paved, they might say, I paid for that.
Go ahead,
Thank you, Mayor
Councillor.
Cooper, and this, I guess, goes back to our discussions about it back in 2016. And I felt that if you're gonna do that, if we were showing the kind of level that we're actually taking in, I think they'd be very appreciative of the fact that we're collecting a sizable towards going forward. But I know it has to do with the tax setup that you have right now as well. So I can leave that right now. The reference in the list there to the reserve and reserve fund reorganization, will that be the correction from last year's target adjustment, the 2,133,513?
Through you, Your Worship. In August of 2017, I did provide that report. We finally had the opportunity to take a look at the 2016 balances in the reserves and reserve funds, and we created all of those new reserve funds and reallocated the monies coming back and forth from, I can't remember all of them off the top of my head, but that's the net result of the reorganization into
2016.
Yeah, it would include amounts like we had a town hall computer system amount, so it's kept in there separately and we keep a running total in an Excel spreadsheet of the computer amounts. We had a small fleet reserve that was brought in there. Those types of things are in that $2 million.
Just one follow-up.
Yes.
So we're not expecting another 2.1 million to come in this year?
Oh, no,
Okay.
through you, Worship, no.
Nice. Okay. Thank you. So 2018-09 status of the capital levy, recommending the Strategic Initiative Standing Committee support. Refer the following staff report to the next regular meeting of council. That staff report T 2018-09 be received for information. Mover, seconder. Councillor Edwards, Councillor Doherty, all those in favor? And that is carried. Other business. Okay, there you go. Move on to looking for a motion to adjourn. Councillor Fryer, all those in favor? And that is carried.